Good evening. This is the Elliott wave update for the NASDAQ 100 for Sunday, July 31st, 2022. The markets attempted to open basically unchanged, got caught up in a little bit of selling, have now started to decline. They're sort of holding on to these lower levels a little bit. So let's kind of dive in, take a look at what we did on Friday, how that expiration turned out, and what lies ahead. So again, as I said on Friday's update or Thursday's update, I flipped it around back to a previous count, which would indicate a much stronger decline happening now versus this low being the completion point, which is now an alternate count, being a completion point for wave, intermediate wave C. And that being the case would also have completed the primary green, the primary B wave, ahead of myself, the primary A wave. So that would then suggest that what we're now involved with off of this low at 11,068 is a primary B wave. Now within that primary B wave, there will be an A, B, C of intermediate degree. And then within that first intermediate wave A, it's either going to break down to be a five-wave structure, or it is also would be an ABC. Now, if I were to count this out as a five-wave structure, I probably could squeak it by. It's pretty sloppy, but I would have to say this is 1, 2, and then we start to subdivide. 1, 2, 3, 4, 5 of 3, possibly that we reached on Friday, and then 4 of 3, and then an additional, a 4, and then a 5, and that would complete the 5. The 4 would be pretty bizarre in my book, and I've talked with some subscribers who feel that it's a leading diagonal triangle, which can form in an A wave position or A wave 1 position. So either way, it kind of could fit. I just don't see the diagonal part of that showing up here. So again, I'm leaving mine as that it's A, B. Again, we're counting a minor wave 2. And that would then conclude that we did A and B, and wave C, which are always 5 waves, is now in force, being 1, 2, 3, 4. And this is the 5. Now that's on my 4-hour chart. So let's open that up. No, see, it always wants to do that. Let me get back. Come on, get there. It's such a pain. And I got to tell you, I got to get a new mouse. Get a new mouse, and that'll take care of the problem. So let me get rid of this right now. Come back down here and open that up. Perfect. So again, A, B, and then we have 1, 2, 3, 4, and then the 5. So if we had to count, we probably have 1, 2, 3, 4, 5, possibly. Or something subdividing in here. Maybe this only ends 3, and then we get a 4, and then we get another 5. Wow. They're not, I mean, they're coming off of that high above 13,000, which we did create on Friday. They're now maybe starting to look a little bit around to see, well, what else is going on and what's kind of happening here. Oh, we're seeing the bonds come off a little bit. We're actually seeing, to see the start of it, is something that I would call a Billy Graham sell-off. Everything is going down. So, you look at it that way, it's like, okay, we have the dollar and the euro. Bitcoin is dropping, crude is dropping, the S&P is dropping, gold is dropping, the NASDAQ's dropping, Russell's dropping, the Dow is dropping, and the 30-year bond is dropping. So I'm like, okay, this is kind of interesting. We get all that going. We haven't found out any of the stocks yet. So, but these are sometimes just, some of the professional traders who had things in expiration and now just kind of making some adjustments prior to the start of trading tomorrow. So what can we do from here? Well, being that I am continuing to count it as a minor wave 2, I'm looking for that minor wave 2 to complete shortly. Now, if this count is correct, and we are now in the last of the 5 up, we can allow for that. We've got 1, 2, 3, a 4, and then a 5 still to come. And if that's the case, then will we have any problem? Look at this. We got to go up too high. I think I got rid of that. Let me take this back out. See where I've got my fibs lined up. Oh, they're the outside fibs. Let's put them back up, and we're going to be looking just for retracements for a wave 2. We take a quick second and go in and change this so that we are accurate in our calculations. And this one was actually 220, 224. Okay, way too high there. 224. Let me double check that again. That one is, whoa, 6875. Excuse me, I knew it was up there. So, and that, well, hold on. Whoa, hold on, doggies. 26. So I'm just going to go to 69. We'll give it the benefit of the doubt. Excuse me for taking so long. Okay. So again, wave 2. Most common for a wave 2 on a Fibonacci basis, when we're looking at retracements, is that it will come in between 50% and 62%. That's been my findings. Most often that it's going to come up in between 50 and 68. Well, it's pretty close. It's pretty close to that 50%. If it all ends up between the two, and I can still count a clean 5, then I can say, okay, if it turns and drops right out of the sky, no problem. Wave complete, we're heading lower. Now, again, working both of the counts. If indeed this does turn out to be the C wave and the finishing point for primary wave A, and we're in that primary wave B, and it starts off with an intermediate wave A. So that would either come in as an ABC, or it's going to come in as a 1, 2, 3, 4, 5, and likely get us up a little bit higher. We've been looking for 13,168, 13,664, up into that area. We're pretty well above those 50s. Next in line in terms of major would be the 200, and that's at 13,579. Now we're adding a technical, right? That's that moving average, and we're working on our daily chart. I'm going to go back down to the 4-hour, see what it changes. Here we have these. We're already above on our 4-hour chart, the 200s, and that's the SMA, EMA, and the 50s, which is the SMA and EMA. In fact, we're doing pretty well there to be above everything, and now it's turning higher pretty strongly. And now we've got this, the SMA, turning higher. That does not mean, actually, that it can't just change, turn, and stop and fall. But it is more indicative it's following up what we did on Friday. And it was a fairly decent move. Again, we had a little bit of sell-off to begin with, and then we just rallied. And we rallied, and we rallied, and we got back. They pushed in the last hour. They pushed up into that above 13,000. Could not hold it. They sold it off. And they continue to hold it lower now. But again, here we are, 4-hour, sitting right on top of the 4. Then we have the 8 coming down at 849. So again, if we drop, even if I bring up to the hourly chart and we start to drop, there are going to be levels that come into play. Right now, the 4 is hooked on the hourly, but it's holding right at the 8. And then again, right below all that, we have the 20 at 12,881. How will we determine whether a market is really getting ready to break down? Well, if it breaks the hourly 20 and keeps pushing, not just break it, jump back, get back above it, break it and keep going, then I am looking for it to come down and test and use as support the 50s, both the EMA and the SMA, which are now kind of just walking up with each other. Almost like this big snake kind of coming up here, or this big whale, all right? So they got that pushing up this way. Now, we also have 12,743. Price support is where we launched off of during the interest rates. And then we did that, and I did that, and then we went. Now, here we are. So actually, that was on Friday. You'll have to excuse me. It wasn't interest rates. It was personal. It was an economic figure, but it definitely was not interest rates. In any case, it was an economic number and the opening. So the opening went down and zipped back up, as I had mentioned before. So if it starts to break, we've got this for support. Then we still have 12,673, 75-ish as support. Those fibs are associated with, actually, they are associated with upside. So this one is associated with that larger down move. And this would be our next resistance level for the continuation of the upside move. Now, continued breakdown again. If it breaks here and keeps it going and doesn't break, stop, go back, test, go back above. But if it breaks, comes back, tests, gets a little bit more information, finds some more sellers, and starts to go, then I would be looking for it to come down and test, at least test, the 50s right there. And a continued break pulls it back down to the 200s on a moving average basis. In between, we have some price support. And again, that price support is, again, equal and living with the 200 right now as the market is being played out. That's what's lining up. And then we continue to have. But now if it's all done, and I can put the minor 2 up there, excuse me, then I would be expecting it to start to drop a little bit more harshly. Now, I do have, I believe that's my hourly chart. This is the hourly chart on NinjaTrader, but this is where I have a lot of my points of control, value areas that have been marked on the charts. So we have Friday, Thursday, Wednesday, Tuesday, Monday. So as this got left on Friday, we had a developing value area high. It just went up and touched it once at 13,011. And on the opening this afternoon or this evening, it touched 13,000. It actually was just a little bit below before they started to sell it down. Now, again, what we do have, if I can get this open, I don't know if it'll do it for me. We can. Isn't that amazing? Don't you love it? Okay, so here we are still in here, but you can see small range, and there's the point of control, and here we have these levels. Now, if it starts to break that point of control, we have another, and this would turn into an extended point of control. All right, see, 92, and then here it's developing in a little bit different color. Because this one was daily, and this turns into an extended. The market went above it, then it came back down and killed it, so there it remains until the whole zone changes. Here we have a developing value area low. It'll stay on the chart, and it becomes a destination. Should the sellers begin to start to bring it off, there's a level that the computers will program to get to. Pivot point at 12,773. Again, you're walking it back down. All these levels are market profile, and therefore they will be played. If we're going to get a downside, this is where I'm looking for the market to come, rest, break, determine what's next as the value area in the supply and demand equation switches, right? Before we had this, and we had all these levels coming up. Now we're going to work these levels going down, because the supply and demand, if the market starts to sell, the demand is to sell. We're looking for bids. Well, buyers are only going to buy so much here. Then they're going to move it down. Then they're only going to buy so much here. Then they're going to move it down, et cetera, et cetera. And what's left in between, the sellers will clean up and keep moving. They will be looking for value. Where can we get our orders executed? Now, whether you want to consider that value, it's understand the concept of the word and how it's being used here. Me personally, what I think is to be value against what I believe may be coming, no, I think it's really horrible value. But today, as it's trading, it's value. It's where a buyer and a seller met and said, yep, good enough for me. Boom, done trade. Value. So whether we agree with it or not. So here are our levels. And those are what I use during the day for the trading day. So we have a lot of data that we can deliver and just mark our way down. And now again, if the market continues to go up, well, we have a ticket, we have an area. I would have to push, and I'm not saying that it gets all the way up to 13,168, but let's see if they do it a good push. If somebody comes in and decides we weren't done on Friday and we're letting you know, and they've all lined up their buy orders. So we walk in tomorrow morning and this thing's and then that's where they fail from. I don't know. But I'm believing that we're getting very close to a point, at least on the hourly chart, and then again, at least on the 4-hour chart, and yet again, likely on the daily chart, where we should get a pullback. If it's the completion of this minor two, it's going to be a quick and very strong, deep pullback. Anything less, well, then we reconsider what the wave count is trying to tell us, and really, what is the wave count? And we look at their preferreds and our alternates, and we make a decision based on what the market is telling us. So that's it for today. And so tomorrow, hopefully it's going to be interesting. Right now, they're just continuing to kind of hit. And again, back here at the 4-hour chart, does not look like much. We kind of come over here to the 5-minute chart and open it up. Nice drop. A nice drop if you got it. And by the way, just to quickly, because I know I ramble on sometimes, that, when you're working with your moving averages, it's the same message no matter the time frame. But keep that time frame in mind. If we're breaking on the 5-minute and these are all starting to head down, I'm looking for this. I'm looking eventually the market should sell and come down to this level. But if I got 1, 2, 3, 4, 5, well, then maybe we get a little bounce in between. We come back, we give a test to the 50 and the 20, and then turn and come down again, still getting to this 200. Now, on the 5-minute chart, when it breaks at 200, I'm out looking at the 15. What's up on the 15? If it starts breaking, you can tell what I'm going to do here. I'm going to go out to the 30. I'm going to go out to my hourly, which I work with during our updates. Keeping an eye on your daily so that you always have an idea, where are we in terms of this bigger picture, which is continuing, in my opinion, to point to lower levels. More on all of that. I've been trying to formulate a podcast for Eye of the Storm podcast, but I really want to bring in some additional factors that I've been studying, and it has to go with what's happening in China, what's happening with Russia, what's happening with oil, what's happening with the dollar, what's happening with some different things that really are going to be contributing and forming this next sequence, these next sequences, and what that all plays into on a global scale. There is a tie-in here, folks, to this longer-term corrective wave pattern down. There is a tie-in to what's happening on a global scale. And I'm trying to put it into context so we understand on the intermediate degree level, when we understand on the primary degree level, when we understand on the cycle degree level, we'll realize how these things can unfold and how it's not unrealistic to think that the market can get down, that the NASDAQ can get down to below 6,800. That it really could go back to the 2009 lows for the NASDAQ, or even further and drop down towards those 2003 lows. These will all remain in, and I will show you that I'm not saying that that's what's going to happen, but when we put the pictures together, and I want to lay it out in a podcast because it's going to take longer, I hope that it'll start to make sense. In any case, I got to end this one so I can get this published and get onto the S&P and have a great trading day tomorrow. And our next update will be on Monday, August 1st.